Hey guys and girls, welcome to this week's episode of the B.Invested with Birchy podcast. I'm your host, Nathan Birchy. It's the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Today, I want to talk to you about something, and there's a few things, and I'm just making this on the fly. I want to share with you guys something I've realized in my life. I'm very busy. I do lots of different things, and it's rare that I get a chance to really sit back, reflect, and get excited, party, celebrate. I don't do anything like that. But something the other day, I just had to take a sit back and go, wow, this is pretty cool, right? And it might be a bit of inspiration for you guys. A lot of people ask, what happens after you build a foundation portfolio? What does it look like, et cetera, et cetera. So what I want to share with you guys is how I gave myself a $200,000 pay rise. I didn't even think about it, right? And I'll take you back on the journey to when I bought my first house. Right? I've talked about this beforehand, where I bought my first house to live in. At the time, I had 100 properties, 150 properties, something like that. And I bought a property for $1.2 million. It was going to cost me about $1,600 a week in interest rates. It was like 8% interest rate at the time, $950,000 loan or something. And when I bought the property, I thought, shit, what happens if I can't afford it, whatever. So I just went to my properties and I put up like 30 rents by $20 here, $30 there, $50 here, whatever. I got myself about $900 a week extra rental income from my investment properties, and then that paid for my house that I was buying to live in at the time. And every time I've gone to move to a different property, I always think, okay, how can I make my portfolio pay for that? So the last time I moved into the house, there was another house I bought after that. And that property, I structured the deal with a creative structure to it. The one I live in now, I sold off like 5 of my properties I bought back in 2010, in 2022, and basically bought things nearly cash. And then I always think, how can I get my portfolio to work for me? So the other day I went to make a funny purchase. It was an interesting purchase. I won't go into detail what it is, but it was really cool, the purchase that I'm looking at doing. And I thought to myself, okay, how much is this going to cost me? It's going to cost me like millions and 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 lots of millions of dollars. And I thought to myself, okay, how am I going to afford this? And I thought to myself, okay, I could sell assets, that's cool. I could create more cash flow from assets, cool. And I just sat there, and the first thing I went to my property portfolio, and I went, shit, I haven't looked at my rents for the last 6 months. Let's do a rent review. And I went through my portfolio and I pushed up my rents. This is the topic of the discussion, right? Is how I made an extra $200,000 a year. So it's all of it just in one hit, right? I just put my rents up by $50 here, $30 there, $50 there, whatever. I realized that throughout my whole portfolio, there's just shy of $4,000 a week, 3,800, something like that, which is about $200,000 a year worth of extra rental income, and I just say it because it was like life goes on, nothing happened, there wasn't confetti, there wasn't, a marching band that came out and said, congratulations, you made it. And there would have been a point 22 years ago, buying my first property, I wouldn't have even thought that that'd be possible in a lifetime to get $200,000 a year positive cash flow. But that was just from managing my assets and managing the cash flow from my assets to be able to extract that extra cash flow from it. So it's pretty cool of an outcome. I just thought I'd share that. And it made me think about some other things that I've been working on this year. And people say, well, what comes after building a foundation portfolio? You get 20 properties, what does it mean? You get to 30 properties, what does it mean? You get 50 properties, what does it mean? And this year, I restructured some loans, which is pretty cool. And I saved myself about $2 million a year in interest just from restructuring those loans, pretty shitty loan structures that I had previously. So that's $2 million a year that I save. Just in that's like 15 properties at about $150,000 a piece that I was able to buy cash this year just from the saving. So it's something just in that on itself is pretty cool. It's having that portfolio, then you can tweak it, you can refine it, you can make it get to its maximum potential. Because people say to me, Nathan, how do you retire like all of these properties? But what do I do? And I was talking to one of my team the other day, maybe 2 weeks ago, 3 weeks ago, and I I said, oh, I'll just settle the property, I had to find the cash for it, whatever. And I had a laugh because one of my bank accounts, I had a rent, there's an annual rent of like 120 grand. It's dropped in, there you go, buy it. And it made me think, the year that I've had, there's been so much growth. I see all my investors, I see you guys that have helped out, the confidence that you've had in trusting us to build that wealth. And I see everyone, every time I have a conversation, it's like, wow, my properties have gone up, my properties done this. And I always feel like I'm the builder with a half-built house, the mechanic with a half-finished car. I'm the property investor with the portfolio that's not 110%, right? I could always be refining it and tweaking it, always working on everything else, more importantly than mine. When I look back on the year that's been, it's been a pretty cool year, being able to tweak that portfolio that I've got. And I did an article that came out like 2 weeks ago or something, where I was talking to the media, and they go, oh, how many properties you bought this? And I was like, oh, I just bought 25, right? I just hit the first half of this year. The first half of 2025 wasn't the best. Just dealing with, refinancing and stuff like that. I was hoping for things to happen quicker than what it did. So what I mean by that, wasn't a bad year. Nothing bad happened. It was just, a lot of things going on. But being able to get a clearer mind and having more energy and whatnot to be able to focus on this, I went out and pushed out 25 properties, and most of those properties, all of the properties were cash. It wasn't from equity. It wasn't from equity that I went and bought the things. They were cash purchases, and the way that I was able to do that is from the rents from my properties, from the cash flow from the foundation portfolio, and just refining what my portfolio looks like. And there's a eclectic mix of different stuff in my portfolio, be it just the normal residential properties, be it motels, be it large land holdings, development sites, whatever. But the things that I bought this year, and I had a little strategy, if I can push my portfolio to tweak the cash flow to get to this level, to then be able to, the properties are printing new properties every month, right? The new properties that I'm purchasing are coming from the rents and profits from the previous properties that I've bought. And then I'm looking at it now, and it's like these cash purchases are now spitting out more cash to buy more, right? So 25 properties, say $300 a week rent. These little shitters that I bought, every property I bought this year, out of those 25, I'd say 20 of them would have been just normal little 200 grand or less residential properties. Some of them at 120 grand, some of them at 150, some of them at 200. And 5 of them would have been like $5 million, $3 million, that sort of thing. And a bit different type of properties. But there's a little standard residentials of the crucial bread and butter. And people might be saying, well, why are you still playing that? Why aren't you developing? Why aren't you doing this? It's like, because that is the market that, you can't build them for that price. The value, the most intrinsic value is in that marketplace, and that's where the biggest gains are happening at the moment. And everything that I bought this year would have gone up 50% minimum already, which is really cool. And it takes me to, what does next week, what does next year look like? And I can see that, you just think about it, right? Like 20 properties, $300 a week, $600 a week. There's like 300 grand a year. There's like 2 properties. So the properties that I bought this year from the rents on my existing portfolio, I've bought these portfolio of properties. Those properties that I bought this year will spit out 2 new properties next year, cash, right? And I'm not even looking at loans and banks and stuff like that. So it's just interesting when I look back, and it's like, what do? Do I sell down stuff, pay out my debt? No, I'm just at a point where I'm like, okay, I'm taking that cash flow, we'll just buy more assets. And at a point, the debt, when I did that refinance a few months ago, like my loans on some of my properties, and they're still just low. I just got a cheaper debt and a better facility. But the loans that I had, and I still got really, are like 50 grand on properties that I bought 20 years ago. It's like, it's kind of wild. At the time, the debt was scary. At the time, I felt like I was going to go bust because I was just pushing as hard as I could. And, there wasn't instant return on, hey, this is how cool you are. But I had the faith and the plan that I had set all those years ago to get me there. And it's working, and it's worked a lot for the last 22 years, and it's working in overdrive now. So I guess the compounding effect, right? If you got one thing, if you have one and doubles to two, you have two, it doubles to four. You have four, it doubles to eight, eight doubles 16, 16 doubles 32, 32 to 36, to 64, 64 to 128, 128 to 256, whatever. And it's not until the later parts of something happens and you see the real compounding effect of the doubling that you can go, wow, that's fucking solid, right? And it's taken me 22 years to see that, hey, these properties is printing out new properties. It's like I've got a farm of properties that just keep printing out more properties. So I made some commentary recently about 10,000 properties I'd like to buy. And it sounds silly, sounds wild. People that are crazy, that, you know, there's a lot of people that probably get upset in the comment section going, how dare this guy, he's taken them all off me. No, I'm providing affordable accommodation for most vulnerable Australians, but we'll leave that aside. But people get the shits with that. But I've actually calculated on how I could get to, you know, the later years of my life and be sitting at a portfolio of 10,000 residential properties for future generations of my offspring, obviously, to be able to enjoy and take on that legacy. And yeah, I guess I never really sit back. I'm just too busy pushing and making the next thing happen. But it wasn't until, yeah, as I said, I'll go back to the start of the story, that I sat there and I was like, shit, you know, I want to make a silly purchase. What would it look like? I just tweaked a few of my investments that I already had. That's without talking about new investments that I purchased this year. That's without any of that cash flow. It's just purely the prior portfolio, tweaking that. Doesn't include, hey, you know, with the motels, you know, the occupancy rates, we've pushed them up. It doesn't factor in the fact of, you know, not just occupancy rates, but the rates at the motels. You know, like if you have 1,000 motel units and they all need a light bulb change, it's 1,000 times $20. That's $20,000, you know, whatever. So things go on scale. It also happens on a cash flow front there. So a lot of those motels have been renovating the last few years, really pushed myself at getting those renos done. There's still a few going on, but they're getting finished. And yeah, it's just exciting to see the compounding effect. And it was just like, hey, I need something. Most people sit there and say, I can't make it happen, or what do I have to sell to make something happen? For me, it's just like, okay, cool, I can sell. What are my 10 options that I've got? I can sell something down to pull that off. I can tweak the rent over here to make that happen. And this is probably the first time in 22 years that I'm like, wow, the impact of that size and the momentum is really taken charge. So it's pretty cool. So that's why I thought I'd just make this little podcast. Yeah, I felt weird about making it because I'm like, hey, I just made an extra 200 grand a year, right? It wasn't for that. It was just, I just think I'm going to do the same thing next year, right? The rents all go up $50, $20, $80, whatever the case may be. And some of them go up $200. Some of them only go up $10 or nothing. But, you know, if I look at the velocity that's been happening over the last few years, I can expect to see the same thing happen next year. And then it'll be like, okay, well, if I can push my rents up an extra 200 grand next year, there's another one little foundation property every year for free coming out of that portfolio. So yeah, interesting time to be alive. The power of inflation, hyperinflation, and having the right assets and the right vehicle to make that happen. So that's why I thought I'd make this video. Hopefully you got something from it. I'm not going to babble on anymore. Thanks for listening. Have a great day. Bye for now. If you have any questions, reach out to